33% of Americans is considered to believe in aliens. But is it the same 1/3 that believe that more stimulus checks, more socialism, more debt has a good benefits to US economy? Studying the knowledge of US citizens in a subject of economy, we may even find that the first group is in the minority in relation to the second. So Blockrevision is here to debunk some economy myths and also talk about newest market trends and what's going on with this broad stock and cryptocurrency markets. However, if you popped in just to watch the trade idea section in order to just take a suggestion on what is worth watching on the stock market today, just look at the video description. You will find a timeline and get straight to this section. Otherwise, I invite you to watch the whole episode to get a broader spectrum of what's going on in the economy. So yeah, let's begin. As of first, let's get to market movers section, and we are talking about the most important events that may make a pivotal change for a direction of where stock market and crypto market are going. So at first, let's look at Monday. On Monday we have not really much events to talk about, so let's get straight to Tuesday. Tuesday, the most important things may be a GDP growth rate year over year, and this one after a skyrocketed indicator that pointed about 14 points on recent change that was an outstanding regarding recent years, even 30 years. Right now is about to stabilize and stay about minus 1.3%. So this is again going down the water, and it's probably to stay a bit longer under a zero level. So a growth rate right now after this reopening unfortunately is going to slow down in this rating again. Afterwards, on Tuesday, we have retail sales from the US month-over-month gauge. And recently, as we will talk about this later in today's episode, we had a tendency where US consumer sentiment has dropped. So right now, in terms of retail sales, we expect at least this one indicator to stay in a positive territory, but it won't be easy. So it's very important to watch right now. That's not maybe a very pivotal indicator that may change the trajectory of where the markets follow, but definitely shows the strength and the weaknesses of US economy right now. On Wednesday, however, we have inflation rate both of Great Britain and Euro area, and CPI is a gauge that measures the change of prices, both goods and services, contained in a basket of consumer items. So we can find that in Great Britain and also in Euro area, this gauge is about to get slower, but doesn't mean that the inflation is already over and we'll get back to this below 2 points area. It's not pretty clear right now. We can also find that CPI is a highly manipulated gauge by a government that changes just the elements that are contained within this ratings. So we may see that CPI even it will get lower, the original prices for US customer may even get higher. And on Thursday we obviously, as every week, have initial jobless claims gauge that is highly observed by Fed in terms of a possibility of hiking interest rates. In terms of earnings of Thursday, we had important data from the Walt Disney that has surprised to the upside for 40%. Also Airbnb plus 76 and Baidu plus 23. There was also Palantir, but it's not published here. It was also surprised into a positive territory plus 13%. So we can find that much of them, even this Baidu that has been also hit by Chinese regulators, are recording profits. In terms of Friday, just look quickly at this. So we can just sort this by market cap. It was Fujifilm into a positive territory. On Friday, however, we may talk about Fujifilm Holdings that has surprised for 145%. And for this week, we have important data publication in terms of few stocks. Those few stocks are, for example, with the highest possible upside is Walmart, that may take advantage of this reopening of economy. So Walmart is one that may expect in terms of data earnings publication. On Wednesday we have Nvidia that has recently had great performance on the stock market, and on Thursday I'll be highly watching Applied Materials that is also on my radar. And right now let's get to economy view section and US consumer. As of first news for today, US consumer sentiment has plummeted in early August to decade low. So we have consumers that are reasoning that the economy's performance will be diminishing over the next several months due to some economic assessments that the pandemic would not end very soon. We have also gauge of University of Michigan for consumer sentiment, and this a bit better than this one mentioned by Reuters, where we just got the 2014 level in terms of consumer sentiment. However, in order to get back to this 2015 and early 2020 levels, there is a lot need to be done, and it may be a path of even a few years in terms of get over there. So on the one hand, we can find that the prices of everything are rising on and on, but on the other hand, we can find that US, especially US consumers, are more and more uncertain about the future. And here you have another factor that may bring us to the lower performance of US stock market soon. So increasing overnight reverse repurchase agreements is a facility for money market funds and other counterparties to place excess cash with the central bank in order to exchange it for a 0% interest rate. This record is right now overpassing $1 trillion, but it's still something that we shouldn't really be very concerned about, as US government is probably just paying down its bill supply in order to unwind its cash pile to avoid breaching the debt ceiling. But if we just get another high amount of cash on the reverse repo, such as even forecasted 2 trillion by the end of the year, it will be something that may just show growing imbalances in front end markets that may also bring us even more downward pressure on short end rates. So Fed reverse repo gaining at this speed with such volume may spark some worries that US short-term rates could get even below zero. So instead of increasing interest rates in order to help US economy, we are right now getting into territory where this hike may be really threatened. So reverse repo is literally designed to keep interest rates from dropping below zero, but right now this exactly facility is booming in its cash excess. And the question that arises here is obviously, why do we really let the central bank to really decide what the interest rate may be, when we clearly can see that markets are interested in a different direction than it is? Why won't we just let the free market to move it in the right direction? And that would be more sensible in terms of finding where we are right now in the economy boom or bust cycle. Let's get to the crypto outlook section, and we can see that by 16th of August we have commenced something that may be called a altcoin season that is favorable for the digital assets similar to Bitcoin, but alternative to it by different utilities. So we can find that recently both BTC and ETH has slumped in dominance by volume on a altcoin markets. We can also find that market cap BTC dominance right now is slowing down and getting back below this 45 points level. So we have struck a bear. We have bared a striking resemblance to what was going on in 2018, where we had a very strong altcoin season, and afterwards a regaining in price of BTC that has left behind altcoins during a first and second quarter of 2018. Right now we can find we got a similar, a bit higher level, but similar in terms of a pattern, and we are right now reversing after this pullback. So will we get back to this 40 or even 36 points area, and will commence another strong altcoin season? So right now the sentiment on a crypto market is not as strong as it was back then, and I wouldn't find this exactly market to regain its exactly the same sentiment that may bring altcoins that are highly risky and more riskier than Bitcoin on new highs. So I would rather find the similarity of 2018, where after this regaining in terms of Bitcoin dominance, we just has gone a little, and afterwards has just retested this 50 points area that is highly expected to be this time. And let's get to the another interesting news. Crypto has gone mainstream. We can find that over half of the 100 largest banks by assets under management are reportedly investors in major crypto and blockchain technology based companies and projects. So it means that crypto right now has double-digit percentage adoption in both whether it's developed and undeveloped countries. It's right now the situation where we have adopted Bitcoin in lots of jurisdictions as a legal tender, and many countries are considering adopting Bitcoin as such. So let's look at this research as of a headline. Top banks investing in crypto and blockchain companies. We can find here the biggest ones such as Morgan Stanley that investing in such solutions is offered by R3 or NYDIG. JP Morgan invested in a consensus that is behind lots of dApps around, and also Goldman Sachs that investing also in R3 and Coin Metrics, so that is a data analytics company. So there are lots of companies that are investing indirectly in cryptocurrencies. Right now, let's get to trade idea section and let's talk about Formation 5 for today, proposition of a trade. So let's get at first what's Formation 5. Formation 5 is called a cross-chain risk parity smart farming for to the world of decentralized finance. It's a kind of evolutionary product that is changing a traditional yield farming and helps some guys to reconfigure DeFi portfolio construction to help manage risk and earn greater results as well. So when a user just get to the Formation 5 and want to put some money into a protocol in order to get some percentage, some extra percentage of a yield farm that helps it to gain it, user just sets a level of risk that is related to his risk appetite and just give a minimum commitment amount determined by the algorithm in top currencies such as BTC, ETH or DOT, and the protocol automatically configure and recommend a chain agnostic portfolio of yield farming. So right now we can find this quite newly introduced solution, but it brings something that hasn't been brought before. So you right now can construct your DeFi portfolio with a algorithmic process and don't want to bother much about a possible risk regarding this one because you just know what you literally buying. So Formation 5 in terms of trading idea is right now in an interesting spot because we just have broken out of this long formed descending triangle, and it's a formation when succeeded, it's a formation that often brings growth. So today we just broke out of this range, and finally we just got above this resistance formed around here. For me, very interesting spot to watch that will probably make a test within a few hours is this one of 0.25 bucks. So after getting out of this 25 bucks, I would just find something for Formation 5 to get like this. So this is a new support that previously was a resistance around this level, and when we just get through this 0.25 USDT, it may bring us higher, even up to a recent highs of 0.40. So with this altcoin season to extend in time, we may expect also to Formation 5 to thrive. In terms of a possible stop loss, I would obviously set the stop loss below this area of 0.2 with a risk reward ratio at the level of 3. So it's very acceptable type of a risk. So one of the concern is that this Formation 5 has broken out of this triangle, but just after an apex, so just after an end of this triangle. So we can find that this formation of descending triangle breakout may be a bit more invalidated. So the probability of getting upside move from here may be limited. However, it's still a good play, as we can see there is a huge volume below this candle, so it may bring us much higher to the area of a trade and with a highest extension of 0.4 USD. Remember that Formation Phi is right now very new altcoin and is trading at 7 times of USD that it was sold during its ICO. So Formation Phi is right now in a quite good spot to make a bet, but remember about risk management, and as it's not very liquid type of an altcoin, just don't risk more than about $1,000 per trade. I would suggest. So this exactly risk-reward ratio put us in favor of making such a bet. However, always just adjust your bets to your risk appetites, and it's one of the most important things. So in terms of area of a possible trade to make, I would find to take a trade around this area. And that's it for today's video. If you have any questions, just put it in a comment section below the video, and if you have enjoyed, just smash the like button. Thank you very much and see you tomorrow.